All right, we are back in action. This is the stock market that is not allowed to go down. It only goes up. It goes up fast and it goes up even faster. That is the regime that we are in. This is week number 6. Surprise, surprise. This rally was led by semiconductors, by memory, by storage, by AI infrastructure. All of the same concentrated leadership is still powering this market higher. It is remarkable. It is breaking records. The speed is just breathtaking, but it is also super frustrating because if you're not involved or not involved heavy enough in this segment of the market that is strong arming everything up, then it is exhausting. So I want to talk about what I am doing, where I am looking for opportunity, how I'm managing the exposure that I do have in some of these rocket ship type names, and more trade ideas at the end of this video. So I hope you're doing well. Thanks for tuning in. Let's take a look here at what's going on. This is the Qs. It's a weekly chart. We are 6 weeks up in a row. We are 28% off of the lows that we made in April. And look at the range here on this week's bar. So we are getting very frothy stretch territory here. We're starting to get into bubble territory. I don't know if I use that word because everybody's got a different definition of it, but point is we're going parabolic. That is what I think we can start to agree on. Here's the SMH, even more parabolic. We are 55+% off of the lows in April. Look at the range this week, up 10%. Look at the volume coming in. We are breaking records across the board here, specifically with semiconductors. This is where there's a lot of comfort and safety of money rotating through to a sure thing of immediate demand, right? We are pulling forward lots of future growth. And so there's lots of comfort in those stocks. XLK, I mean, you're basically just rounding out the same thing. The point is you've got this leadership here. So if you are fortunate to have exposure here, obviously you are, in very sort of good spirits. I posted a video yesterday on the channel on how I am managing this exposure. Basically, anything that's just going totally vertical like these charts, I am taking profits into strength. I am raising up stops. I'm taking size down. I still want to participate, but I need to be aware that we have covered a lot of ground in a short amount of time. And that's the way I'm sort of responsibly trying to approach it as a trader. Check out that video. It has everything for that segment of people who are fortunate enough to be in these stocks. There's another way you can manage risk here, right? So these are a couple of approaches for, people with in-market exposure. Our long-term system, our Galahad trading system, is sort of our alternative to buy and hold investing. We came in and bought the Qs here in end of April or middle of April. And so we've had a very nice run here in the Qs as well. Now, Galahad has not taken any profit off the book, but what it does do is start to layer in and purchase put protection in, future months. So basically it's trying to hedge out some of its downside risk. This is another way you can try and be in market, capture the historic run, but still have some responsible kind of sleep easy at night mechanism at your back. So these are the two things that I am doing. For rockets, I am taking profits. I am raising stops. For Galahad, that automated trading system, I am buying put protection. I'm riding the trends higher. That's where life looks good. Now, from the trader standpoint, this is a pretty deep, intense graphic I had AI make right before I hit publish. And it was a lot more intense than I thought it was going to be, but I ran with it. So here's how I am thinking about this right now. This is what I think everybody needs to be asking themselves who's actively trading. Are we expecting rotation and a broadening out from here? Or are we expecting that we are going to have money leaving the stock market, going into safety havens, think dollar, think treasuries, think maybe gold, not really treated as a safety haven in this cycle, but those are the two kind of extremes. I think when you start to look at this concentrated leadership, you need to start asking yourself, where does the evidence stack up and where do you think things are going? Last week, we talked about warning signs. We talked about warning signs of yields. Yields didn't get any worse this week. They cooled off. So the risk that we saw, or the warning sign that we saw, actually got a little bit better this week. Now, This chart here looks, still like it's in a holding pattern. We could see yields start to spike and break out. That would start to, lead us into, hey, maybe the money is going to be leaving the market if we start to hit some risks here. We talked about crude oil. Crude oil potentially breaking out, right? Last week, this was a warning sign. What happened? We saw crude roll over, right? Start to move lower. Obviously, peace negotiations and trying to open the strait again and ceasefires, and we're bringing oil back down. So these warning signs that were on our horizon, and they still should be on our horizon, they actually did get better this week, and that kind of gave maybe some room for stocks to continue to their exuberant sort of state. 52-week highs in breadth. So we talked about this as a warning sign. Breadth still sucks, just plain and simple. It's really not breaking out above this 150 to 200. This is Thursday's number, but we're still not seeing many stocks hit 52-week highs right now. Very concentrated. If you look at our market environment indicator on our website for subscribers, again, we're seeing kind of different view here. Percentage of stocks above a 20 SMA, looking at McClellan Oscillator. Things are just mixed. So you're not really getting a ton of, confirmation that makes you feel great about this rally. So you kind of ask yourself, where are we? Are we going to be broadening out? Are these warning signs going to get better? Are we going to see rates in oil continue to roll over? Are we going to see Russell 2000 and participation start to expand? Or are we going to, see some type of ugly action here in the market when the only group heading higher starts to stumble? We're going to be in some tough shape. So I want to talk about this side of things. I want to talk about if you're, maybe not involved in some of the hardware and tech infrastructure plays that are working, where could we look for rotation while keeping an eye on these warning signs? So we're going to talk about all of that in the second half of this video. Let's get through some of these numbers here. So this was the performance on the week. Q's up 5.5%. I mean, it's almost enough said there. Gold performed 2.5%. Oil was down almost 7%. Here's the S&P 500 up and to the right. Here's VIX down and to the right. Dollar index down and to the right. 10-year treasury down and to the right. So pretty clear pattern this week, not a whole lot of ambiguity, a little bit of, kind of stumbling early on, but I think all in all, it was a pretty clear roadmap. Technology, 8.5% to the upside. This is a remarkable move here for XLK. XLE, biggest hit, down 5.4%, produced a sell signal for us here on Friday. Energy. So remember, energy we talked about as a potential hedge to the portfolio, and it did. It hedged. Hedging requires, the loss of money when it doesn't go, when it doesn't zig, when everything else zags. Well, we saw it zag, and we saw on Friday here for us anyway, in our smart trend model, started to produce a sell signal again. Crude oil rolled over, right? Yields came down, all those things. Risks sort of abated in that realm. And then we saw, the other side of risk assets perform. So energy back in the penalty box here. Percentage above 20 SMA starting to, kind of glide lower here into the bottom half. And put to call ratio, again, it's much cheaper to hedge now than it has been any time in the past couple of months. So there's not a whole lot of folks looking for protection right now. We're going to look at some charts. We're going to look at some trade ideas where I'm finding sort of the most opportunity. Our sponsor of this episode, though, we can't finish without shouting out IBD, Investors Business Daily. 2 links in the description of this show. Check them out after you get done watching. IBD Digital, Market Surge, discounts for new subscribers. We'll be back in a minute here with some charts. All right, we are back. We've got Warden TC2000 in front of us. This is S&P 500 weekly chart. And again, like we looked at the top of the show, we are up in a straight line. If we go to a daily chart, the question you ask yourself here as a trader is, if you're buying into this, which I don't think many people maybe watching this trading is going to be buying the SPY outright, but you got to ask yourself, where's the logical stop loss? Where are you wrong in your thesis in your trade entry? And again, I think it's just very tricky here. You've got this consolidation from a week ago, 2 weeks ago. I think that's your reference point, right? We were using 6,900, give or take. I think you can cheat up to about 7,000, 7,100, 7,050, somewhere in this zone now for kind of the intermediate trend. But you're giving the, you got to give some room here, given how fast we've climbed. Again, we're all-time highs. There's nothing above us, so life looks pretty good. QQQ, even more stretched, right? If I throw Bollinger Bands on here, you can see we're pushing out from the upper 2 and 20. Weekly chart, we're well above the Bollinger Band. So we are stretched, right? It is a full-on chase parabolic market for the Qs. Risk managing this gets even tougher because where do you put exits and stops? Again, I think if you're trying to be very cute and trade this short term, you can just use reference points from yesterday's lows. But we haven't had a multi-day pullback here in the Qs since the end of April. So we're waiting for any type of breather, sideways chop, let things catch up and digest, instead of just, kind of taking a one-day pause and then just immediately going up, up, and up. So there's not too much else to say about it. I think, ultimately we're using the principles that, again, I recorded in that video yesterday to take profits, continue to trail a stop. We'll look at some of our stops and where they are. But generally speaking, market's at all-time highs and it's stretched and it's concentrated. So let's look at some other things. Let's look at gold and some of the metals. GLD actually starting to show a little bit of life here. This is now a 2.5% up week. You can see we basically engulfed last week's action, and we are trying to put in a higher low here. So this is mildly interesting. We still have a position here in GLD in our Galahad trading system, so I'd love to see this be some type of higher low versus March lows, but a little bit of energy kind of coming back here. And I think silver is also interesting. You can see again a weekly bullish engulfing, 6-7% up for silver, held above the March lows. Still, it's not the cleanest looking chart, but it's looking like the bulls are trying to regain some energy here. So this could be a potential rotation spot for each of these assets. We can also look at things like the gold miners, which we did start to see a couple of signals show up in our momentum model in gold miners. So this is probably a spot you want to start to pay attention to. Silver miners could do the same here. This looks, again, mildly constructive, maybe not ready immediately, but it's trying to firm itself up. And I posted a chart on XME, so it's kind of a similar situation, maybe a little more steel heavy or other material names in this. But XME had a decent pullback here from the highs into the lows of March, about 25%. And you can see it's starting to pick itself back up. So a little bit of kind of diversity of maybe where you can find more boring, but XLU is not so boring because there's so many kind of REIT data center plays in here. Obviously, you could go more specific and not just trade the whole basket of all REITs, but XLU is kind of, selling back off down into some multi-week, multi-month support, maybe carving out some type of, bottoming pattern here in the above 44. I think that could be interesting. I know it's not sexy, but again, for participation that's not high beta, something to look at. Now, let's go high beta. Let's look at something that I think is where we want to be paying attention to. So we'll pull up, all right, I got TradingView up here. Let's look at crypto and crypto broadly. So not just Bitcoin. Now Bitcoin, I've talked about it. I was early on it. Hasn't quite given the move that I thought we would get out of it. Maybe still early, maybe still developing. I thought really above that 78 would start to give us the good trigger to just accelerate higher. So we haven't quite seen that. We're at 80. The trade's working, but it's not a blockbuster yet. I like the potential here still. I still have, positioning across the board here in Bitcoin, but I also want to draw your attention to Ethereum. Ethereum here, I think, is got an interesting pattern as well. It's maybe a little bit more sluggish than Bitcoin, but this is an exercise in looking for things that are not just tech hardware, AI infrastructure, semi, the things that are working, we know what those are. We know how we have to trade them. But for potential rotation here, if we're going to see broadening out, we talked about software as a broadening out theme. That's starting to work. So maybe crypto is the next one. Ethereum, I think, is just, again, looking pretty interesting here. If it can start to collect itself and push over this 2400, it feels like a squeeze and some type of markup here could happen pretty quickly. There's legislation that's trying to get through Congress right now on the Clarity Act. It seems like, poly market odds are starting to inch up, show that, it's likely that we're going to see a bill get signed. So maybe we're going to get some excitement into that. And I think Solana is also interesting. So these kind of alts, more speculative. The longer term trends are all terrible in these. Take a look at the zoomed out view. I mean, it's a series of lower highs and lower lows. But we've gone nowhere now since February. We washed out February, all the sentiment and, price, book, let's call it. And now this is starting to gather just a little bit of momentum. So if we can start to see some rotation and breakouts, I think the levels are all pretty clear. If you don't like trading the crypto, then we can look at, of course, IBIT for Bitcoin, Ethereum's trust iShares is ETHA. Solana, there's a few of them. I've been using BSOL. So you can see the volume starting to pick up here, the expansion that we saw a bit on Friday here. And again, if we can start to clear through these cluster of highs, which we're testing, and we're taking out the April highs now, you could get a nice rotation there. You've also got the crypto equities that you could look at as well. So MicroStrat or Strategy being the primary one, just reported earnings. You can see it is, looking like a pretty constructive base here after a bloodbath of 7 months of pain. And so the technicals are starting to line up here. MSTR is at a pretty important inflection point. If it starts to move over 190, we get that nice air pocket into the twos. Coin, pretty similar. I don't have a position. I don't really trade coin too much, but you can see the high volume that came out. Earnings are out, and that's likely a beneficiary. BMNR. So if you remember this one, this was a retail frenzy favorite, a BitMine. I actually think the chart, again, looks pretty attractive if you believe that Ethereum and you believe that some of this is going to get past here. It's been basing, it's moving sideways. There's no overbought conditions here. There's no froth and, stretched behavior. This is a fresh sort of rotational spot in the market that I think has legs if we can start to clear above 2360 or so in BMNR. So, I have positions in most of these stocks I'm talking about, just full disclosure, of course. And even, let's see, do I even want to show? Yeah, let's show. I want to be careful on the smaller stuff. Backed, I did pick some up. I've never traded this before, but it's been on the watch list for a while. I did pick a little bit of this up, small size, very speculative, smaller company, but an infrastructure play, absolutely crushed. But certainly, if we do get clarity and we do get some of the Ethereum Solana breakouts, you'd expect some of these other alternative or smaller kind of crypto equities start to participate. And of course, you got Circle. Circle's working, right? And again, a pretty clear pattern here. You've got a nice kind of higher low against the February lows. So some of these equities are actually looking a little bit better than the underlying sort of or spot cryptos. So that's my attention. So I was doing some buying here this week in this segment, looking for potential rotation. It's early, it's aggressive, it's speculative, but if you're not looking to chase, all the other stuff, put some eyes over here and let's see if we can get some strength and momentum. Now, let's wrap up here with our trading systems. So we've got Galahad, we've got Quant Rockets. S&P was up 0.81%, Galahad up 1.5%, Quant Rockets up 2%. We got 3 new buys for Monday. 36 profit targets hit in Quant Rockets this week. Longest held, best performing position is Light right now at 122%. Galahad down here, 3.5% up over the last 5 days versus S&P at 2.33. Let's take a look at our chart book. So I favorited a few things that aren't so extended. SOXL, this was really going to be for illustration purposes. We've hit all our targets, but again, look at where our stop loss is. It's ratcheting higher aggressively each day. I've talked about this one. This one was in the video on how I'm managing risk in this. So that's been an amazing one. Datadog, we talked about software. Obviously, this was a good lucky earnings report, but we swept through a couple of profit targets. You can see our stop is getting raised. Again, this is how we're managing sort of that fast-paced market. Let's look at a new actionable signal here. So this is JOBY. This isn't new for us. We've been in the trade for 15 days, but it's finally starting to work here. I'm not sure if this was earnings 2 days ago. I can't quite remember, but you can see our entry was at 950, current stop's 882, first target's 1130. We haven't hit it. This is another one that's been beaten up for a long time. And again, if you start to get the traders that feel, fat and happy from profits in other sectors, then maybe you get some rotation into some of these more speculative beaten up names. JOBY, I think, is interesting with that volume. COHR, we've been in and out of this a few different times, but currently in it from 295, and you can see not too stretched, hasn't hit our first target, still pretty actionable. And then we do have a current position here in coin. We're down in the trade right now. We bought it at 205.20 15 days ago. So it's been chopping around, kind of making up its mind, almost stopped us out today, but it got its act together. And we'll see if this can start to break out. Our first target's up here around 257. So those are some different ideas for, where to look next if you are tired of the same old 20 or 30 names that are driving everything up. Hopefully this video was helpful. It's a frustrating market in a different way, but hopefully some of you have been able to capitalize on it. And thanks as always for tuning in. We've got links in the description of the show to our sponsor, to our Galahad trading system, and to our Rockets trading system. Have a great weekend. We'll see you back here next Friday. Take care.